going to start that now. And I'll let TJ introduce himself and a little bit more about Fregasso.
So, hello, everyone. I'm TJ Drost with Fregasso Financial Advisors. I manage our institutional and nonprofit endowment area for the firm. On a daily basis, what I'm doing is I'm working with our nonprofit clients along with our high net worth investors on ways where we can both receive contributions into the nonprofit accounts that we have, as well as some more creative ways for our investors to do this without necessarily using cash all the time. Believe me, cash is king. I'm never going to say don't take cash donations because that's the predominant way of doing things. But what we've realized from our discussions with our clients has been we have a lot of folks with highly appreciated assets where their cost basis may be pretty low, and there's an opportunity for them to donate those securities to the nonprofit organizations where if you have an investment account, you receive those securities, you sell them, there's no capital gains to you, but the client, the donor who donates those securities, they're able to get a tax advantaged situation for themselves. So it's turned out to be a pretty nice conversation. I think this all evolved originally with just talking with individual investors, and then we created a marketing sheet on it, which Carolyn, I believe you have the marketing sheet and you'll share that later today, but it has since evolved to this presentation. So without further ado, I'll bring this up and go through this with you folks.
And when TJ and I were putting all this together, I think the one thing that we wanted to discuss is we know that a lot of you do have other ways of getting your fundraising up and running. You have cash donations and kind donations. And as we think about how we approach our funders, how we approach people that are going to invest in our missions, thinking about really building those relationships. You don't meet someone automatically and say you want to marry them. You meet them and then you go on different dates. And so it's very similar whenever you're building those relationships with the people who are going to end up being your biggest supporters. So you may not necessarily, you may learn about this today and not use it for maybe another month or two while you're working with donors. Or maybe you have a donor right now that you have a very close relationship with, and this is the perfect thing to ask them. But keep in mind, as TJ talks, that that relationship with your donor is going to be vital to understanding how that donor can respond to some of the needs that you have. So yeah, TJ, go ahead. Thank you.
Okay. So again, this is titled Why Stock Donations Are Better Than Cash Donations. I'm just going to reword this to say why stock donations may be better than cash donations. So we're going to be covering 4 reasons why we believe stock donations are, just as good as cash donations. So the first reason will be, like cash, by donating these stocks to charitable organizations, the individual investor donor is going to receive a tax deduction. The second reason we'll cover will be, stock donations may help take the liability out of the portfolio for the client. I'm just going to move that. Here we go. Reason 3, there's a better use for cash. And this will be for that individual who decides they do want to, move in-kind securities from their account over to your nonprofit account. I'm going to talk about some reasons how you can use the cash and how it may benefit the individual investor, how that's going to benefit them. And then the last reason we're going to cover is donating stock increases the size of the gift typically to the nonprofit organization. And this has rung true for us for several years. We've had a few of our organizations that have received significant amounts of stock donations. And then when I go back to the organization, I say, does this person give as much in cash? It's usually the answer is no. So just want to provide some alternatives to the traditional ways of receiving donations to organizations. So reason number 1, like cash, donating stock to charity is tax deductible. So for those individual donors with means, this donating stock or mutual funds or bonds in kind to a charitable organization is going to be a powerful way for them to make an impact with that organization that they care about. Also, there's that possibility that it could provide the individual donor with a reduction in their annual tax obligation. Also, whether you make the donation in stock or in cash, you're still getting that deduction. The one thing I will note here, and I'll have to cheat off my notes a little bit, is if you choose to have a donor who donates stock to you, they're going to have to make sure that they itemize on their tax return. So right now, the way the federal limits are, we're probably at the highest standard deduction of all time. But if you're a single filer, you're going to need to have at least $12,401 of itemized deductions in order to take advantage of this particular opportunity. If you're married and filing jointly, you're going to need at least $18,651 in order to itemize your deductions to take advantage of charitable contributions. And then lastly, if you're filing head of household, you would need $18,651 of itemized deductions in order to have this affect your tax return on the positive side. Moving to reason 2, donating stock takes liability out of the donor's portfolio. So if the donor has highly appreciated stock and decides to donate that to the charity, it should remove some tax liability and enable that investor to make that desired donation. Let's face it, the donors that we have, they're going to make this donation whether they get the tax deduction or not. But if they have a portfolio of investments, it may not be a bad opportunity to have that discussion and say, I think typically what this individual has been doing is selling securities, realizing a capital gain, and then providing the cash to the organization. Here, if they simply contact their advisor or their custodian and just say, I'd like to move this over into the investment account for my nonprofit organization, it happens, and typically you're going to get more donation dollars because the individual investor / donor doesn't have to worry about the capital gains tax when he files on April 15th. So just down here, deducting that donation from the adjusted gross income, that's a number near the bottom of your 1040. Possibly they're not have to worry about capital gains tax. So again, I always give that situation, I get the call from the client, and it's my job as a financial advisor to educate my clients along the way. So if I get that call and they tell me, well, I have $10,000 worth of Microsoft stock, I'd like to donate that to a charity, so I want to sell that. Well, I might tell them your cost basis, your original purchase price is $1,000. If we sell this outright, you're going to have a $9,000 tax hit. Not attractive. But if I tell them, look, we can do this and probably get more dollars to the organization that you care about by just moving that stock position in kind over into the charitable organizations account, they'll tell me what paperwork do I need to sign. It makes a lot more sense to do it that way, we feel, than to go through the extra steps of taking a capital gain. And in the end, it's going to help not only the organization, but also the individual donor's tax situation as well. Flipping to reason 3, there's a better use for cash. So let's assume, again, I had that conversation with my client from earlier in this presentation that he decides I'm going to move that stock that's the Microsoft stock that's $10,000 from my portfolio. But he may have the fear that, look, I'm giving up that position in my account. I'm going to have a gap in that specific area or sector of my portfolio. I'm happy to do it, but what are we going to do to replenish that? So in this particular case, the client donates the stock over to the charitable organization for $10,000. The client has cash of $10,000. We repurchase the stock in his portfolio. So we've got two pretty neat things that can occur here. The cost basis is reset to a higher number. Same individual calls me 2 years later, and we've established that Microsoft position at 10,000. It's now worth 15,000. He calls me up and says, I need some money for my kids' college expenses. Well, it's $15,000. We reset it to 10,000. So it's a $5,000 capital gain to the investor. If he would not have done that, it might be a $9,000 capital gain. So just some things to think about there. My last bullet point is going to talk about future tax loss harvesting. So when we talk about tax loss harvesting, that's selling a security that's at a loss and using those losses for the donor's individual tax returns so that they can reduce their overall tax due to the federal government. So in the same scenario, let's say made the donation, we repurchased Microsoft for $10,000. Now he comes to me and says, well, the security is only worth $7,000. I'd like to sell that stock to absorb that loss. So we were able to absorb the $3,000 loss. He can offset his income on his tax return. So again, there are better uses for cash, at least for the donor, if he chooses to move that stock over in kind to the organization's account. Moving to reason 4, donating stock increases the size of the gift. I'm a firm believer in this, and I've seen this over the last couple of years. Stock donations tend to be larger than cash donations. I'll just provide a quick example. Last November, I was contacted by one of my nonprofit organizations that we manage assets for, and they told me, I just received word from a donor. He's going to donate 1 share of Berkshire Hathaway stock to us. And the individual who called me didn't know that 1 share of Berkshire Hathaway stock is $300,000. So it was, when I informed her of that, she was like, oh, wow, that's a lot more than I thought this 1 share of stock would be worth. And I asked her, I said, does this same individual provide cash donations as well? She said he or she does, but it's not in the amount of $300,000. So there's that ability to, and we've seen it, it's not always 30, it could be 25, it could be 50, it could be 10, but there's a higher likelihood, at least that we've seen, by getting these stock donations that the size of the gift is larger. So as I probed the nonprofit client that I have a little bit further, I had, once she got the information about everything, she came back to me and told me that this individual client's cost basis or original purchase price of that stock was around $100,000. So in essence, he was saving around $200,000 in capital gains. As soon as that stock made its way over to the nonprofit account, which is the case 99% of the time, they ask that we liquidate it immediately. We don't want to get a lot of price fluctuation on that. And then the nonprofit organization tells me how much money they need to have sent to their checking. It could be all of it. It could be a portion. Or they may tell me, look, just sell the security, allocate it across our investment according to the investment policy statement that you have on hand. So I think it really opens up a lot of different doors for organizations to have this conversation. And, to the donor, he's getting that added benefit of receiving the tax donation for the stock's full fair market value. Now, in that particular case, I didn't know the donor's income level, but if he wasn't able to absorb $300,000 worth of deductions, you can certainly roll that forward over a 5-year period, taking advantage of that gift and receiving that deduction over time. So, but it's really been a game changer for us. And it's funny, a lot of the organizations that we worked with, and I know Carolyn's going to share that document with you, they've added that into some of their fundraising campaigns, just saying, here's a handout, just gives you some different ideas on how you may want to think about contributing to us in the future or even now. So on the next slide, I'm just going to go over some best practices. Oops, I'm sorry. I'm actually going to go through an example of stock size, donating stock, how it may increase the size of your gift. So on the left-hand side, we're looking at selling securities and donating cash. On the right-hand side, we're looking at just donating securities in kind as they are. So again, we'll say it's Microsoft. It's currently at 50,000 on both sides. Cost basis, original purchase price was 30,000. Well, if I'm a donor and I know I'm going to have at least $20,000 worth of gain on this position, as much as I want to give this all to the charitable organization, I know Uncle Sam's going to ding me come tax time for some of this gain that I owe. So I decided to hold close to 10% back on this security. The result, the charitable organization gets $45,240. That's a great number. However, if I move this security from my own individual account to XYZ charitable organization's account, I don't realize any long-term capital gains, and the organization gets $50,000. Now, when the charitable organization sells this, again, you're a nonprofit entity. You sell this, there's no tax impact for you. Simply a gain of nearly $5,000, just looking at one simple scenario. So let's face it, 2020 has been a heck of a year. Donations have probably been harder than normal to get just because, some things have changed in the economy, and our lifestyles have been changed too. So any ideas where we can help present to our donors that, maybe we don't always present these kind of items to them, this may seem attractive to help them, make their contributions to the organizations that they hold near and dear, but also help them out from a tax perspective as well. So now on this slide, I'm just going to talk about some best practices for organizations who are going to be receiving stock donations. So first off, in order to receive stock donations or mutual fund donations in kind, you're going to need to have a brokerage account set up. So I think making sure that you establish that account with a trusted advisor or custodian, if you're choosing to do this on your own, who keeps transaction costs low. Again, 2020 has been a very challenging year. If we're lucky enough to get donors who donate to us these securities, once they come into our investment account, we want to make sure that we're not getting hit with transaction costs that are too high. The one thing I will say about my industry in general, there's been quite a bit of fee compression across the board. So those most brokerage accounts, financial advisors who are trading securities now, if you're buying or selling stock, there's usually no cost for that. Same thing with ETFs or exchange traded funds, usually zero cost. However, if a mutual fund transfers over, it's still in a more antiquated type of system where there's usually a fee to trade a mutual fund. And that's usually going to be somewhere from $0 to $25 a trade. So still relatively low in the grand scheme of things, but do your homework. Check with others who may have an investment account for a referral, and see if they're happy with the cost and the financial advisor if they're giving them sound advice. Moving on to best practice number 2, establish timelines for potential donors to afford tax savings benefits. So this one I think is always a tough one. The last thing you want to tell your donors are, we need the money by this specific time period, because let's face it, we appreciate everything our donors do for us. We don't want to just say stop here. But in the case of receiving stock donations or bond or mutual fund donations, it's going to require some paperwork. So I'll just give you the example. If I'm looking to donate my $10,000 worth of Microsoft shares to XYZ nonprofit that I love, I'm going to have to meet with my financial advisor, sign some paperwork. Also, I'm going to have to obtain the nonprofit's delivery instructions to make sure that I can get that stock from my account to their account before the end of the year. So the actual process itself, moving the stock from my account to the nonprofit account, is really fast. It's just the time lag for paperwork, unfortunately, just like everything else. Paperwork takes a decent amount of time to complete. But I think, probably if you gave yourselves 5 to 7 business days to do this, you'll be able to accomplish that. And let's face it, December is a busy month for everyone. It's, we get into crunch time with just about everything we're doing. But I think probably December 15th, no later than December 22nd, as a potential deadline date for donors. That's going to lead me into best practice number 3, which is establishing a system to provide donors with the important information regarding their stock donation. So when the donor moves the stock from his account over to the nonprofit account, it's going to move from their account, and they get credited with, for their donation, it's an average of the high and the low price of the day that it moves out. So what I think is a best practice, and what I typically do for my clients, is as soon as I see the donation hit the account, I call my nonprofit organization and say, look, these Microsoft shares, they hit today. It looks like it was initiated on this date. Here's the high and the low price. Can you send this over to your donor? I want to get that off to them as quickly as I can. So if you're using a financial advisor, they'll be able to provide you that information. You don't need to become experts on tracking the high and the low price of stocks on a daily basis. Let your financial advisor do that. Or if you're just doing this on your own, let the custodian provide you with that information, because we want to get that to the donor in their hands as efficiently as we can, because he's going to pass that on to his CPA. Therefore, he can receive that deduction on his future tax return in a timely basis. So, Carolyn, that's everything I think I had to cover on here. I'm going to flip this back over to you.
Sounds great. And I think the one thing I had to wrap up and follow up with what you're saying is, as we think about our donors, like we started with, you're building a relationship with your donor. So if a donor does make a stock donation or a large donation, we all know that we can send thank you cards, calls, and things like that. But those are really going to make the difference between, and I mentioned this because I saw a lot of you had sort of one-time donors on that registration list, is that when you want to establish that relationship and keep that relationship going, your donors are going to be more likely to form a personal connection to you and your mission. You'll learn what your donors are really interested in, what they value about your organization, and you'll be able to bridge that connection and hopefully steward them into being recurring donors. And we have a next step session at the end of November, or I guess middle of November. We're not getting into anyone's Thanksgiving dinners, but that will go over some best tips and tricks about appreciating donors and volunteers, and how you make the most of stewarding those people that mean the most to your organization. I think we have some time now for some Q&A with TJ, but I had a question for you, TJ. Would you be able to elaborate a little bit more on the custodian model of accepting those stock donations and having those types of transactions within a nonprofit?
Sure. So when we talk about custodian, we talk about where the account is set up as. So I'll just use, for example, at Fregasso, we use TD Ameritrade as our platform. So TD Ameritrade would be the custodian on the institutional side. That being said, you could probably go to TD Ameritrade retail side if you did not want a financial advisor, establish the account for the nonprofit organization, and they would be your custodian. I have some friends in that Wexford office. I mean, it's two different sides of the business, but they do a really nice job working with their clients. So it'll probably afford you a little bit less in fees. But again, sometimes working with a financial advisor who can provide that guidance, it really comes in handy as far as structuring that portfolio, figuring out exactly, look, are we going to sell everything that just came in? Or are we going to keep a portion of this and allocate it across the investment policy statement within that strategy? But costs are low now. It's a great time, for nonprofits, a great time for anyone You know, it's not, you know, when I got into this industry 25 years ago, if you were to sell stock, it was 3 cents a share, $35 minimum. That could add up pretty quickly. So I'm glad we're seeing a fee compression there. And it's really, particularly for the nonprofit clients, you want to keep more dollars in your pocket.
I've got a couple other questions in the back of my mind, but I want to hear from everyone else. So feel free. We have the chat where you can ask your questions, or feel free to unmute yourself and tell us your thoughts and ask any questions to either myself or TJ.
Hi, could you compare what you just described to the donor advised fund that an individual can set up for themselves and then donate from that?
Sure. So with the donor advised fund, it's kind of going more into it's more of a bucket of nonprofits. It's not necessarily directed individually towards a specific nonprofit client. So if I have a nonprofit client that's in the arts, and it's XYZ Arts, if they have their own account, everything that is getting donated is going into that account. Donor advised is a little bit different. You know, it isn't necessarily just for that one organization. It could be going to a basket full of organizations. So there's definitely great organizations that are on the donor advised side. You know, there's many great companies around town. You want to be conscious of the fees though, if you're looking at that avenue.
Thanks, TJ.
Sure.
Yeah, any other questions?
The one thing I didn't bring up, and I would say this has gained so much traction, and you guys might be receiving this already, but a lot of clients who once, it used to be at age 70 and a half, you had to take a required minimum distribution from retirement accounts. It's now been pushed to 72. But my clients, my affluent individual clients have really latched on to, look, if we have to take this money out of our account. The government's telling us that. The government has added in that stipulation, though, if you take your required minimum distribution and even beyond that amount and give that money to charities and nonprofit organizations, that money comes out tax-free. I can't tell you how many of my clients do that. And, you know, it's not just our firm educating clients this way. I would think that most financial advisory firms are having that conversation with their client. They know them you know your clients very well. If they, you know, have an affiliation with a particular organization, you're going to give them, you know, that commentary or that recommendation that, you know, rather than doing it this way, use that required minimum distribution. It's going to help you out. It's helping out the organizations. It's wonderful.
Awesome. Is there anything else that you've seen in terms of our current situation in COVID that has changed? I know when we were preparing for this, we talked a little bit about the CARES Act, which actually ties the opposite way from the donations, but is good information to know if you're talking to your donors right now.
Yeah, I think the CARES Act is great. And that's why I kept saying stock donations may be better than cash donations. For those clients that are making cash contributions to cash gifts to organizations this year, they're receiving 100% deduction up to their adjusted gross income level, where in previous years, it's been 60%. So I think it's an exceptional way. And from what I've read, it doesn't, from what I've read in a couple of things, it doesn't sound like the government's going to take that away. I think it might be going forward the way that's going to be. So kudos to the government, really, you know, trying to make sure that the nonprofit sector is getting, you know, those dollars. And really, that's a great way to promote it because, I mean, some folks may be reluctant to give that much cash sometimes, but if they're able to get a complete deduction too, they're going to do it. But in the end, if you care about your organization, it's not even the deduction that does it for you.
Can I get a quick show of hands? Who already has a investment account with their organization? Awesome.
Great.
So if TJ, I guess, what advice would you give to someone who doesn't have an investment account and then someone who already has an investment account? So if you don't, how do you get started? And if you do, how do you make the most of that investment fund that you already have?
Sure. So we'll start with, if you don't have an account, it's pretty easy to establish. I mean, let's face it, the nonprofit world, anytime we set up a checking account or anything, it's a lot of paper. But you know, you'll just need to make sure you have your articles of incorporation or other type of formation documents. Also, your letter from the IRS stating that you're a nonprofit entity, and then simply you could reach out to most financial advisory firms. A good place to look, and I know, I don't want to self-promote, so I'm going to say if you go out to Google and look up nonprofit managers, I think that's a great place to start. Or again, if you're looking to keep costs lower, and you feel confident that you'll be able to manage this type of account and be able to take care of things, reach out to those retail institutions like TD Ameritrade Retail or E-Trade. They'll be able to establish the account for you. And the main thing there, make sure those transaction costs are low. That's a big thing, because you just don't want to get dinged on that. So if you have an account set up and you're really looking to amplify that, I think build this into your fundraising activities. Talk about, look, there's different ways that you can help out the organization, whether that's through the stock donation process, whether that's the cash donation process, or the required minimum distributions. A lot of the times, it's just a matter of educating your donors, my clients, and letting them know, look, you can do it this way. I had a gentleman who was doing contributions out of his investment account for years, and he was already over 70 and a half. And I was like, have you considered doing this from your required minimum distribution? He's like, I didn't know you could do that. I was like, well, we spoke about this several times, but I guess it just didn't catch on. But what he did was he's like, okay, let's do it. And he's like, would you be able to give me a checkbook for my IRA account? I'm like, I certainly can. So he literally writes checks off of that to his charitable organizations, provides me with a copy and a CPA so that we know how, what his charitable contributions are per year from that IRA. And it's going, that benefit's tax-free to him. And obviously it's tax-free benefits to the organizations that he's, a part of.
No, that's great. I know Scott Hacker's on the line here, and he works with a nonprofit, but also deals with insurance. And I think he's driving today, so I don't think he's going to unmute to say hello to us. But the one thing that he always says is you don't know what you don't know, and making sure that everyone knows what those options are and that they have a clear understanding of what their choices are is the best place to start. And knowing that you're in your role with your organization, you are close to your donors. And so your donor may not be asking these questions to their financial advisors. They may want to give, but not know what those options are. And so once you're in that donor's ear, supporter's ear, you having knowledge and being able to attend the session and talk to them about those types of options is going to be very valuable to helping them maximize the way they're able to support your organization too. So I think that this has been a really great discussion today. Is there any other questions for TJ at this point? Awesome. You covered everything, TJ.
Oh, I wish. I could go on for days and probably put you all to sleep, but
I did have one thing. Is there time? I think we're at a very early stage of finding these particular donors and approaching them. That just scares me because I'm being approached at my age. Sometimes I don't like it. I throw that in the wastebasket, Reminds me of my mortality.
Yeah, and I think from the fundraising side, I know I've talked to a number of different fundraisers who are the larger fundraisers at places like University of Pittsburgh, CMU, Duquesne, who are making those calls to people and asking for bequests or those types of forms of giving. And I know from what they've said, it is that delicate balance of you need to be sure that you have that relationship, and knowing when to pivot and make that ask is
Yeah.
important. Because if you ask someone too soon, they might end up being offended, and then you've got to backpedal a little bit and, and reform that relationship. So there's a lot of trust that goes into the fundraising sector for sure. Yeah. TJ, does your organization deal with bequests or any type of that type of inheritance giving for organizations?
Certainly. And, that's part of, if I talk about an individual client, for example, when we sit down with them, we want to see their estate planning documents. And then we're going to talk to them about, all right, what organizations or nonprofits are you affiliated with? Do you want to list them as a beneficiary on your IRA? So we open that conversation up. It's a deep relationship of really learning to understand each other. And then also, we like to see the estate planning documents too, because obviously some folks are going to put in their estate planning docs, look, I want a portion of my assets that go to Planned Parenthood or, Society of Contemporary Craft, whatever the organization is. It's good to know that. And you really want to honor those wishes too. And I think the one thing that we also like to do is revisit that with that client, because needs change. And the last thing we want to do is something falls out of favor for that individual client, they pass away, maybe their needs aren't being met by what they really intended to do. So we try to, at least annually have that conversation. And if they need to be updated, we can make that change. But at a minimum, clients should be reviewing it every 5 years.
Awesome. Well, I'd love to hear a little bit more. We're a small group, so I'm going to stop our recording now, but keep us all together. I would love to hear now, after hearing everything that you have, what types of contributions would you like to receive, or in what ways do you want to diversify your fundraising? Because that will help me as I continue to put these sessions together and learn what you need.